Welcome to Early Returns, hosted by Jan Baran, a partner of Holtzman Vogel. This podcast examines law and politics and seeks insights from political players in elections, lobbying, media, and the law. Now, let's join our host, Jan Baran.
Welcome back to Early Returns, a podcast about law and politics. I'm your host, Jan Baran. Our producer is Jody Mayer-Piazza. If you're like me, you've heard about cryptocurrency. Most likely, you've heard about Bitcoin, which is the most commonly owned and traded digital coin. Until I started preparing for this episode, I didn't know that there are thousands of so-called digital assets and coins, and that they have an estimated market capitalization of almost $4 trillion. Hundreds of billions of dollars of crypto are traded every day. I really don't understand crypto. I'm a long-time investor in stocks, bonds, and real estate, but I shy away from putting money into something I can't see or which doesn't produce goods or services. According to a recent Gallup poll, almost everyone has heard of crypto, but few understand it, fewer invest in it, and most people will not consider buying cryptocurrency. There is a lot going on about crypto in the financial world. And in the world of law and politics, in July of this year, President Trump signed the first major legislation involving crypto. It's called the Genius Act. Not coincidentally, there is a growing number of super PACs funded by the crypto industry. They've been spending large amounts of money in select congressional campaigns. To help me unpack what is going on and to understand more about crypto, law, and politics, I'm pleased to have as my guest Faryar Shirzad. Faryar is Chief Policy Officer at Coinbase, an online platform for buying, selling, transferring, and storing cryptocurrency. He leads the company's engagement with policymakers around the world. Before joining Coinbase, Faryar was global co-head of government affairs at Goldman Sachs. Previous to that, he served as Deputy National Security Advisor for President George W. Bush. In that role, he was the president's personal representative to the G8 conference. Prior to the White House, Faryar was assistant secretary at the Department of Commerce. And before that, he was international trade counsel to the U.S. Senate Finance Committee. Early in his career, he practiced law in Washington, D.C. He has a law degree from the University of Virginia, a master's degree from the Kennedy School at Harvard, and a bachelor's of science degree from the University of Maryland. Faryar, welcome to Early Returns, and thanks for being here.
Oh, thanks, Jan. I'm super happy to be here. The one part of my bio you left out was that I was editor of one of the journals at UVA, and you were the chair of our advisory council, and that's where you and I first met many years ago. So I thought, make sure we include that. It was a really important moment when I got to meet the legendary Jan Baran. And you were extremely helpful as we had all sorts of ambitions to make the journal, particularly relevant in whatever the elections were that were going on in that year that I was the editor, and thrilled to kind of be back with you here.
Well, thank you. You have so much in your background that I suffer from omission apparently here. But I will confirm that I met you at that time, and I'm very proud to see what had happened to one of the students I met at the University of Virginia and how he turned out even after leaving the actual practice of law, and perhaps there's many lessons to discuss there. But I also left out any of your other personal information, and I think it would be helpful to maybe flesh out your bio a little more in a personal way. I know you were born in London, but I don't know where you grew up, how you wound up at the University of Virginia. Where did you grow up?
Well, my family story is sort of the quintessential American story. My dad was an Iranian diplomat under the Shah, prior to the Iranian Revolution. And so he was a diplomat in London where I was born, and he had a variety of postings. We came to the U.S. in 1973, I guess, and he was a press officer at the embassy. He then went on to become consul general in New York, and then in Houston, and then in New York. And it was in New York when the revolution happened. I think I was 13 years old, and we got the opportunity to stay and move back to Washington, where my father had bought a house when he was a press officer. And we opened a delicatessen and a food store in Bethesda to make ends meet, because we sort of went from diplomat life to having no money life. And, I think I learned from my father about how exciting it is to be at the intersection of policy and international stuff. And so eventually my career took me there and my own version of that. So, I was naturalized as soon as we were eligible for that. So I'm a naturalized American citizen, extremely grateful to this country for everything it did for me and my family. And then more recently, I'm a father of two amazing boys and live in Washington and very happy to find myself where I am now.
Well, see, there's another thing we have in common. I also am an immigrant. My father wasn't a diplomat. He was simply a Polish engineer, but he got caught up with the Nazis and spent most of the war in concentration camps. But we were lucky enough to finally get visas to immigrate to the United States. And life went on from there as well. And so there are millions of stories like our families. And it's just great to encounter them, to see what opportunities were given to people by the United States and what opportunities were capitalized on by us and by our children. Well, back to your professional life. I mentioned that you spent your time in government service, but then you left the White House apparently and you wound up at Goldman Sachs. Is that accurate? And what did you do for Goldman Sachs, which is, of course, the largest investment bank in the world, I think, and mammoth all over the globe. So you had a big job there. What did you do?
In the White House, I was the Deputy National Security Advisor for International Economics, which was a job I didn't know existed, but I think maybe one of the coolest jobs in government you can have. You have the privilege of sitting as a deputy in the NSC and the National Economic Council, and you help staff the president and help coordinate the agencies on international economic work. And so when I was leaving, my own background was in trade policy and trade law, even though my job was much broader in the White House. But Goldman Sachs recruited me to come and join them. And at the time, they didn't really have a government affairs office of any scale. And I kind of came in without portfolio. But not long after I came to Goldman, the financial crisis happened. And like every financial institution across the planet, Goldman was faced with regulators, finance ministries, central banks, bank regulators, everyone sort of deciding that it was time to re-architect the entire framework of financial regulation globally all at once. So I was asked to be the first global head of government affairs at Goldman Sachs. Our team went from a handful of people to 10 or more times that. And much of what I did at Goldman was organized around navigating the financial crisis and then the post-crisis regulatory stuff that follows, so the Dodd-Frank Act in the US and equivalents in Europe and Asia, plus a big network of global standard setting bodies. And that all actually became not to jump ahead, became really relevant to crypto, because crypto is going through a similar version of that. All the architecture of financial regulation came under reassessment and reexamination and redesign after the financial crisis. So it was a lot of figuring out what first principles are. And a lot of financial regulation was formed over decades. And so there's a lot of lost memory as to why rules are the way they are for traditional financial institutions. And so when I had a chance to come to crypto, it was sort of a parallel. It was a version of that in the sense it wasn't policymakers needing to redesign an existing system, but figuring out a new system for a new technology. And so that was what was attractive about that. So there's been a lot of parallels between my Goldman experience and my crypto experience, which I'm happy to talk about.
You did shift from a somewhat traditional financial services or participant base into something that was brand new. I mean, had you heard of Coinbase? I assume you were approached by Coinbase to come over, or how did that happen? And I don't know how I would react if I got contacted by something I didn't know about or understand. Was that your situation?
Yeah, I mean, I hate to admit it because most people's crypto origin story involves some kind of version of reading the Satoshi white paper and recognizing what the future is going to look like and being a kind of a historic pathfinder. Mine was not that story at all. I got a call from a recruiter, and I actually didn't really know much about Coinbase. So I Googled it quickly while he was talking to me, and I was like, well, I don't know. And he said, no, you really need to talk to them. And I don't know if it was love at first sight or what, but it was very apparent that I needed to jump on the Coinbase rocket ship. And I'm so grateful that I did.
Yeah. Well, I explained Coinbase is, I guess it's not really an exchange. It's called a platform, right? It's a platform for trading and buying and selling and bartering and maybe having custody of people's Bitcoins and holding it for them and things of that sort. Is there a more ample explanation to somebody who doesn't know anything about crypto or Coinbase? What is it that they do, and why is it you've got 100 million customers apparently that use whatever it is you do?
Well, if you think about the traditional financial system, in a way, it's actually useful to think of the traditional financial system as it existed, 60, 70 years ago, where every stock, every bond, every derivatives contract, every loan, everything was sort of recorded in paper form. And much of the financial system involved different intermediaries whose job it was to maintain large file cabinets storing whatever the relevant certificate was, whether it was a deposit certificate or a stock certificate or whatever.
It's just like those retirement forms for government workers that apparently are stored in a salt cave somewhere in Pennsylvania, right?
Yeah. And actually, if you think of it in paper form, it actually is more illustrative of how the traditional financial system works. Now, a lot of it has been digitally recorded and a lot of the movements are digitally, but fundamentally, much of the financial system is built on the predicate that you need a whole bunch of intermediaries to store and record your interest in a thing. So whether the thing is a stock certificate, or cash or whatever it happens to be. And so what crypto does, I'm kind of jumping around, but I'm going to answer your question. What crypto does, crypto is an information technology breakthrough. So when the internet came about, it did a really cool and important thing, which was allowed you and me to send peer-to-peer without an intermediary information. So I can send you a note. You and I can do this video call. People can listen to the podcast. They can post and transfer information seamlessly peer-to-peer. That was the breakthrough. And the data moves across a decentralized protocol governed by a loose network of developers, engineers, and foundations. That's how the internet works. What the internet did not do is to figure out how you move a thing of value. So if I want to send you $1 in an email, I can send you a picture of $1. I can send you a picture of $100, but you're not going to have the dollar. You'll just have a picture of $1. I can send you a picture of a stock certificate. And the only way you get it is by me asking an intermediary to send that, have my bank, my exchange, my brokerage send the stock certificate to your bank brokerage or whoever. That's how the system works. So the internet was a giant breakthrough of moving data that represents information, but it couldn't allow for the movement of value. Crypto is a technology breakthrough, an information technology breakthrough that figured that conundrum out. And what crypto allows you to do is to create unique digital tokens. And those tokens can be anything. They can be $1, they can be a stock certificate. And so what it does is essentially takes the magic of the internet and applies it to value transfers. And so the first token that was created was Bitcoin, and people now invest in Bitcoin, and the market cap is enormous. And it's the best performing asset in the last 10 years. The value went from, $0 to $110,000 per Bitcoin. But in a way, that's kind of distracting as to what crypto is. Crypto is the information technology breakthrough. The most visible manifestation of it is this token called Bitcoin. But there are billions and billions of dollars being spent right now to figure out how to create tokens that represent other things of value: your driver's license, your mortgage, your deed to your house, your title to your car, your stocks, your bonds, your derivatives transactions. And once you tokenize all those, they can move seamlessly peer-to-peer. And what Coinbase does is build the infrastructure for tokenization and transfer of tokenized things on a peer-to-peer basis between individuals.
So how would you distinguish what Coinbase does from the traditional intermediary? I mean, if I wanted to send $1, I go to my bank to transfer $1 to somebody else to pay my bills, things of that sort. If I can tokenize everything, if I can tokenize $1, why would I need Coinbase to send a token of $1 to somebody else?
Yeah, what Coinbase does is it basically helps people wherever they are on their crypto journey, so to speak. So most of our customers come to Coinbase because they want to trade crypto, but they want us to intermediate it. So they'll download our app, they'll hold their balances in a way that we manage for them. And so if they lose their password or whatever, we can help them. And we have an order matching engine that helps, connect buyers and sellers. So much of what Coinbase is actually much like a traditional bank brokerage in the sense that we allow people to buy and sell, and we manage and intermediate that. So that's a big, big part of what we do. But we also similarly custody. So we're the world's largest crypto custodian. So if you have crypto and you're nervous about losing your keys or what have you, you can give it to us. And we're the largest custodian in the world of crypto because it's a very, very complicated information security exercise to do that. But at the same time, we're also building the tools for people to not use and not need an intermediary like Coinbase. And so we essentially are the whole complex of how people want to interact with crypto, whether they want to use an intermediary or whether they don't. We build the tools for that.
So if somebody wanted to trade in cryptocurrencies or purchase a cryptocurrency, they could do that. They would have to presumably get into the blockchain to do this. They'd have to do it all on their own. Or they could go to Coinbase. That would help them execute all of that. Is that an accurate description?
Exactly. So you can come to Coinbase, and there are a number of other exchanges that provide similar services. And you just download the app and you do what you would do when you sign on to any other financial app. And we're regulated similarly to a lot of the financial apps. We are subject to the bank secrecy and AML controls. We do checks on our customers to make sure they're not subject to some sanctions block or whatever. So much of our business is very traditional in that regard, but lots and lots of our customers come to us because they want to have what we call crypto first solutions. So they don't want to have us intermediate. And so we have a wallet, which is basically it's a piece of software that you can download from us. You can get similar wallets from other people, but it's essentially, we call it the TBA wallet. And you can basically go on there and immediately access decentralized exchanges that allow you to trade crypto peer-to-peer, but not go through Coinbase and do that. And so it's a bit of a mind bender because as soon as people think they understand what we do or what crypto does, you hear a different version of it. But it's like trying to explain the internet early on. Is the internet is it an email or is it a text or is it a website? Is it a video call or, what is it? It's a technology, and crypto is a technology too.
Well, I mentioned in my introduction that there are presumably hundreds, if not thousands, of crypto coins out there, which suggests that anybody can start one of these coins.
Yeah.
Of course, I should have added that it's dominated by Bitcoin and a handful of other currencies, Ether, Solana, and so on. Even though there might be many, many versions of these cryptocurrencies, all the current wealth seems to be gravitating towards one end. How does somebody start a new currency? Why would they do that? And I'm asking this in the context of the recent news. The Trump company that's run by the president's sons have already started a couple of currencies, one of which allegedly has enhanced their personal wealth $5 billion overnight, apparently. And of course, even before the president was inaugurated, there was some sort of a token that was issued called $Trump. I don't know how they pronounce it, but it's a $sign with the word Trump after it. And there you have a cryptocurrency. I mean, how do they do that? How does anyone do it? Why do they do it? And are they just expecting people to send them money? I mean, it's sort of mystifying. This is all part of why I am baffled by what's going on. I just don't understand it, as apparently 70 or 80, 90% of the American public, they hear about it, they see it, they don't understand what's going on. Do you have an insight into what's going on when somebody wants to create a cryptocurrency?
Yeah, so that's a really good question. So it's confusing because, like I said, crypto is a technology and it can manifest in a million different ways. So just at the moment people think they've figured it out, then another manifestation of the technology comes up and it gets confusing. I would think of crypto tokens like websites. Anybody can set up a website, and your website may be extremely well curated and provide enormous value and be worth visiting and investing my time in, but my website might be frivolous and dumb. But the technology of allowing people, of having people build websites is a very democratic one. And so your website maybe was born and we all thought it was dumb, but you iterated on it and developed it and it became better. And so people's affinity to a token or whatever is just, whatever the market bears. And so I would say that's kind of one frame of reference to think about it. But fundamentally, each time somebody issues a token, they're generally building a crypto network that then they issue a token that provides governance rights with regard to that network. So if you have an Ethereum, you have governance rights with regard to the Ethereum network. And so for the 95% of the market cap of crypto is all concentrated in maybe 8 or 9 tokens. So yes, there are tens of thousands or more crypto tokens out there, but the overwhelming, 90x% of crypto activity is really concentrated in 8 or 9 tokens. And those tokens represent 2 different types of networks. One is Bitcoin, and Bitcoin has become adopted globally as a store of value that competes with gold. So people have just now adopted Bitcoin and feel like it's a safe place to put your money because it operates under a protocol that governs how much Bitcoin can be created, limits the supply, and the adoption is now so comprehensive and global that people feel like if you live in a hyperinflationary economy or you have another reason why you want to store your money somewhere where you feel like it's safer than your domestic investment options or currency options you would invest in. That's Bitcoin. And Bitcoin is, 50, 60, 70% of the market of crypto. The rest of the big crypto tokens, Ethereum, Solana, and others are what they call programmable networks. So much of the applications that are being built in crypto to facilitate payments, to facilitate social media, to facilitate whatever, are being built on those 8 or 9 other networks that have huge adoption. And so there's a race going on to build networks that can match the processing speed of traditional payment networks. So right now, the largest payment processors in the world are, in terms of volume of numbers of transactions, or Visa's number 1, I think, and maybe MasterCard's close second or something like that. And they can process, millions of transactions per minute or tens of millions. I don't know what the exact number is offhand. And so what crypto networks allowed you to do is allow you and I to transfer an Ethereum token seamlessly, but they couldn't get scaled. You couldn't build an application on Ethereum that matched the processing speed of the computers that underlie the Visa network. And so what people have done, including Coinbase, is building networks on top of things like Ethereum, which is what we did, that allow you to have the peer-to-peer transaction capabilities of crypto, but at speeds that begin and pricing that it begins to approximate the big payment processors. And one of the big important things that happened in crypto about a year ago was that Visa announced that they were actually integrating crypto technology into their processing systems. And they've issued a really thoughtful paper on this. And they basically said, we think, I'm paraphrasing, obviously, and they said this in a much more nuanced, sophisticated way, but we think we've reached peak processing in terms of our ability to scale our processing networks. And we think stablecoin or crypto-based settlement can be a unlock for us to build resiliency, speed, and scale that can augment our capabilities. And to have somebody with the sophistication of Visa say that, I think is really important. So it's easy to kind of look at a coin that people wonder, like, why are people buying the Trump coin or whatever they're buying? Happy to have a discussion about that. But I think there's a lot of huge news that's being broken every week, including by companies like Visa, who recognize that the technology is the future and are integrating it into their traditional systems.
Well, this probably would be a relevant transition to the Genius Act, right?
Yeah.
Which I mentioned in my intro, that this is the first big, correct me if I'm wrong, but I understand it's the first big piece of legislation passed by Congress regarding cryptocurrencies in some fashion. And part of the reason is that Congress and the government officials aren't really sure what to do about cryptocurrency, right? you have this new technology, you have this new phenomenon. It's growing exponentially. There are complaints about it. There are misunderstandings. Government feels like we ought to do something. We should regulate it. If it's new and it moves or has money involved, we ought to regulate it, but they're not sure how to regulate it. But now they've come up with a piece of legislation called the Genius Act. What's the significance of that legislation? What does it do? And it seems to be relevant to your explanation about how cryptocurrency has methods more significant long-term than just whether it has a store of value for its own sake, the way Bitcoin does.
Exactly. I think that was said perfectly. So the Genius Act is a piece of legislation that Congress just passed a couple of months ago that creates a federal regulatory framework on the issuance of U.S. dollar stablecoins. And
explain what that means.
Yeah. So remember I said that crypto allows you to create a token and then trade it peer-to-peer without an intermediary. Maybe the most important token you can create is the dollar, US dollar. So right now we have dollars in paper form and we also have the dollar manifested in digital form. But what you don't have is a version of the dollar that can be transferred between two people without the need for an intermediary. And so the Genius Act was essentially a sort of a bet that just like we've moved the huge parts of the economy to the internet, that we're going to move the huge parts of our economy into tokenized activity. And the dollar being available in tokenized form allows people to transact peer-to-peer using crypto technology. At the moment, there's about 180 billion US dollar stablecoins in global circulation. They annually turn over on the order of $3 to $4 trillion in terms of the turnover over the course of the year. A lot of analysts, Citi, and others expect the market cap of stablecoins to go from, the 140 billion or 180 billion right now to something on the order of $1 to $2 to $3 trillion. And what a stablecoin is a token that represents a dollar. So if I'm an issuer under the Genius Act, I'll be regulated by the Office of the Controller of the Currency, which is, the national bank regulator in the US regulatory system. Subject to a licensing and regulation by the OCC, an issuer can get customers like you and me to come. We give them $1 and they give us a dollar token. And then once you and I have our dollar token, if I take you to lunch, or if we go to lunch and I cover you, you can send me $20 peer-to-peer in an email or whatever without requiring the bank to intermediate that.
Will I be able to do that by email or do I have to use Coinbase to execute this transaction?
You can use what is known as your crypto wallet. So you can, so I have a wallet, you'll have a wallet, and I'll just send it from my wallet to your wallet seamlessly.
So eventually, anybody with a computer, once this goes into operation, can set up their own personal account in which they will have their tokens and simply execute it directly between themselves and whoever they want to receive the token without having to use a bank or Coinbase. Is that correct?
That's right. And so like right now, if you go to I get my haircut at a barbershop that, I pay by Venmo. And so when I get my haircut at the end, I scan a QR code and I pay with Venmo and it feels seamless and instantaneous. But payments are actually an extraordinarily anachronistic and antiquated system in the United States. So even though it feels like the barbershop got my $35 instantaneously, what Venmo is actually doing is extending credit on my behalf and putting money into the barbershop's bank account for me. And then I pay a fee for them to cover me as the banks chug along and move my dollar from my bank account over the course of 3, 4 days, 5 days to Venmo's bank account and, and to cover them for having, extended credit and paid the barbershop on my behalf. And so
this is what's called settlement time, isn't it?
Yeah.
In the financial industry, whether you're writing a check, whether you're paying a credit card bill or making a credit card charge, there's a lag time where all of this gets sorted out. And
that's right.
With crypto and tokens, it would be instantaneous. Is that correct?
It would be instantaneous. So the first gain of crypto is that it just provides efficiency. We have an incredibly high friction, slow, and cumbersome payment system in the United States. So the ability under the Genius Act now to, under US regulation, issue dollar stablecoins and transact simple transactions or big complicated transactions now going to be made cheaper, faster, safer. And there's no settlement lag, which creates risk in the financial system. Anytime you have a lag between a transaction and its final settlement, that's a period of risk that exists. And so that's the first benefit of crypto. The second benefit of crypto, the more important benefit, is you can essentially program the money. So rather than, we can enter into a derivatives contract, and every day in derivatives contracts, there's they reset every day. So as the market moves, you and I can have a derivatives contract that's based on the movement of, let's say, pork or something. And every day, the contract that exists between you and I will resettle. And it may be that one day I owe you $1 to get us back to balance, or you owe me $1. And all of that involves thousands and thousands, tens of thousands of people on Wall Street whose job it is simply to execute that settlement. We can create a programmable derivatives contract where that settlement occurs instantaneously, that the smart contract underlying the derivatives trade between the two of us immediately allows for that resettlement to occur without that back-end processing. And there are any number of other applications. So for example, people talk a lot about AI, and there's something called agentic AI. So the ability of asking an AI to go buy airline tickets for you or whatever, or engage in transactions. AI needs a digital native payment mechanism to execute a transaction on your behalf. And so if you've got an AI protocol that's job it is to figure out your inventory management system and to source stuff for you and buy it in real time so that you don't have the sort of inventory management overhang that a traditional system would have, and you've got AI managing it for you. It needs a payment mechanism, and crypto technology allows you to use tokenized dollars or tokenized whatever to pay, and your inventory is represented in tokenized forms, and that's how the AI will be able to process the information that you've given it.
Well, it sounds like a very brave new world to me, and very dynamic. With respect to the Genius Act, now that the law is that you can have a token, a digital token, pegged to a dollar value of currency, of fiat currency, who now, under this law, can issue a token? And who polices the fact that when somebody issues a token pegged to $1, that there's actually $1 standing behind it, right? I mean, how does that work?
Yeah, the business model of token issuers is pretty simple. So if I'm an issuer of a token, what I do is I create a token and I make sure that the technology is actually more complicated than it sounds. But let's say I just create a token and it's freely movable among a multitude of networks. So as I said, crypto is a bunch of different networks. And so you want to have your dollar be able to move across what they call chain hop and operate across multiple networks.
Yeah.
And so you'll decide, okay, my dollar stablecoin is something you want to invest in. For me to issue that stablecoin, I have to go to the OCC, the Office of the Controller of the Currency, and get a charter as a stablecoin issuer. And they'll ensure a bunch of things. One is that there are liquid reserves backing the token that I issued, and that you have rights as my customer to show up anytime and hand me that token back and say, give me my dollar, and I have to give it back to you. There are audit requirements that apply to me as the issuer. So I have to do regular audits, and I have to do public disclosures and any number of other things. But
does Coinbase have a token? Does it issue tokens? Will it?
No, we don't issue a stable coin, but we have a very close commercial partnership with Circle that issues the largest US regulated stable coin. And so, but we accommodate other stable coins as well, but we have a commercial interest in USDC, US dollar coin, which is the biggest US issue dollar stable coin.
So how long will it take, do you think, for stable coins pegged to the dollar, you've already have one, USDC, to be of common use commercially by retail users like me? I mean, when do you think I'm going to be using a stable coin to transfer money or something of value in exchange for a haircut like you're getting these days?
The Genius Act is going to be very catalytic on that. Right now, what we're seeing is a lot of interest on the part of big multinationals who are trying to repatriate large balances from across the country into the United States. So cross-border payments are probably the most high friction, most expensive way to move money. People don't fully understand how complicated it is to move a dollar from one country to another. And with the stablecoin, you can do that within, seconds for minimal costs. And so you're seeing big companies like JP Morgan, We Do It, Stripe, others essentially offering corporate clients the ability to move. And so, for a big multinational that has a company, in whatever, in France or whatever.
Yeah. So does JP Morgan, does it have a stable coin yet, or is it going to have to issue one?
It has a token. I think it's called Onyx, that they essentially have said, because the technology, Jamie Dimon's been very critical of crypto, but he actually has hundreds and hundreds of people working on crypto technology-based infrastructure upgrading. And so they're a very fierce competitor in crypto, and they're working on, not in crypto, like buying and selling whatever, a meme coin or something, but then the payment side, they're extremely interested in it.
I understand that there's another piece of legislation that's circulating currently called the Clarity Act, which is going to do more. It's going to jump off of whatever was accomplished with the Genius Act, and now it's going to be clear, which will be welcome. We would all welcome clarity in all of this, obviously. What's the next step legislatively? What's going on, and what will it mean to us?
So the two big legislative priorities were stablecoins, so making sure that there's a regulatory framework at the federal level for issuing a dollar token. And what Clarity does is it regulates the trading of crypto. So it basically says, if you're a token issuer and you're trying to raise funds off of your token, you're subject to this and that regulation. And it designates the SEC in some instances and the CFTC in other instances. So these are the two market regulators we have in the US, essentially directs them to provide a regulatory framework around how crypto should be traded.
Hasn't this been one of the big conundrums? Because this is technology, because it's so new, it doesn't neatly fit into the traditional regulatory framework of either a stock or a commodity. Can it be resolved by dividing it up this way, or do we actually need a third new regulator that's devoted solely to crypto trading and assets?
The US is the only major market in the world that has two different market regulators. So we have the CFTC, which is the Commodities Futures Trading Commission, which regulates commodity derivatives and futures. And then we have the SEC that regulates the securities market. And so in every other jurisdiction in the world, when they've tried to deal with crypto, not everyone and not every country has done this, but in most major economies, it's actually not that complicated an exercise, because they'll ask the market regulator to create rules for how crypto is traded. And they basically adapt the existing rules to the technology, because, like, as I said, much of the rules are organized around assuming the presence of an intermediary. And so if you don't have an intermediary, you have to reimagine how the regulations are organized. And so what most countries have done is essentially say, hey, market regulator, figure out how to regulate the crypto markets. And they more or less land generally in the same place. In the US, it's super hard to do that because we've divided commodities and securities into two different agencies. And those agencies are overseen by two different committees in the House and in the Senate. And you know this, Jan, better than anyone. There's no sharper dividing line in Washington than turf. And so what you had in the Biden administration is you had a pitched battle between the SEC and the CFTC over who would regulate the space. And in particular, you had an SEC chairman who decided to go to war with the industry. He spent the first year as chair saying he had no authority to regulate crypto markets and Congress should pass legislation, and then spent the 3 years following trying to destroy the industry and drive it offshore purely for political reasons. And the chaos of that and the trauma of that has led to the Clarity Act, which I'm very proud to say every Republican, I think, and 78 Democrats do vote for it in the House. So if you were looking for bipartisanship in Washington, crypto is the most bipartisan major issue in Washington right now.
Well, Faryar, what's it like to go up to Congress and try and explain crypto to a congressman?
I actually very much enjoy it. It's a big spectrum that you find among members of Congress. For the vast majority, obviously, there's just a lot of explanation. But what's really fascinating is that in almost every instance, even with members who know very little about crypto, there's often a staffer or a relative or a child or a son or a what have you who's very much into crypto. So it's very typical to come across officials who have had some personal exposure to it through their staff or their family members. And that's always helpful in the conversation. The other thing which is actually worth underscoring is there are a handful of bitter enemies of crypto, which I still to this day don't understand, who've been trying to destroy the industry. But there's a larger, probably a small, but much larger group who are actually so crypto forward that their technical skills are actually beyond my own. And so it's a real diversity when you go up to the Hill and talk to members about the crypto issue.
Well, one of the big advocates for crypto who was very knowledgeable about it is a senator who was elected last year in 2024 in Ohio, Senator Moreno. And he ran against an incumbent senator who was very much, let's say, crypto skeptic. And according to published reports, one of the major reasons for Senator Moreno's election, according to the press, is that he was very much supported by the crypto industry through Super PACs, who spent vast amounts of money in support of his campaigns in Ohio. And my research indicates that one of the major donors to one of these super PACs was, lo and behold, Coinbase. So Coinbase is a big player in campaigns. How did it decide to get involved? When did it decide to get involved?
Yeah, it's a good question. So I joined Coinbase in 2021, and my job was to figure out how to tell the story of crypto to policymakers so that we could get good, sensible regulations around the sectors that would protect consumers and promote innovation. And so I did all the things that you normally do when you do government relations, policy advocacy. We did white papers and deeper dive documents, and we talked to members and held roundtables and did all sorts of things. At some point in the middle of 2023, we realized that there was a small group of progressive members of Congress and the key regulators in the Biden administration who were unambiguously trying to destroy the industry, drive it offshore, and were targeting individuals in the crypto sector through regulatory action. And so if you talk to a group of crypto people, not just big company people, but grassroots people, you'll find it very typical that anyone who's got involvement in crypto, in many instances, a significant percentage of them lost bank accounts, couldn't get mortgages, couldn't get auto loans. It was one of the most disgraceful uses of political power in American history, targeting a disfavored group of people purely for political reasons. And so at that point, we realized that we had an existential battle that we were in the midst of, and there was no amount of white papers that were going to solve the problem against the enemies that we were facing. And so we built the largest political operation any industry's ever built. And the way I put it is that we built this large political operation to take the politics out of crypto. And so what we did is two big things. One is we launched this thing called Stand With Crypto, which is a grassroots organization which now has about 2.4 million Americans who've signed on as advocates. So 2.4 million, which, Jan, you'll understand how enormous that is. And these are people typically who signed off of our app or off of the app of other exchanges. So these are real people who actually went through a complicated onboarding to sign up as advocates. So that 2.4 million gives you the scale of how big the grassroots movement is around crypto. And then the other thing we did is that we were a very significant donor to the Super PAC, Faryar Shirzad, which did spend enormously in certain races, including in that Ohio race. So we're very proud of having done it. And we're very proud, frankly, to have stood up for the rule of law, because what the average crypto people were facing under the Biden administration required a response. And we were able to help deliver that response. And I feel in a way it was an enormously patriotic thing to stand up in defense of people who were being victimized by the administration. And I'm really pleased that we were able to be helpful in that regard.
Well, clearly you were effective. And I will note that the candidate that Senator Moreno defeated in 2024, apparently, is trying to come back to the Senate by running again in 2026, which I will interpret as meaning that the crypto industry may be involved in that race again. Is that a fair estimation on my part?
Well, we'll take a close look at it. But one thing I would say, Jan, which is important to underscore, is so the Stand With Crypto organization, 2.4 million advocates who've signed up. Stanward Crypto, it's now and you'll understand this better than your listeners will, but it's a 501c4 organization. So we launched it, but it's an independent group. They surveyed their members. The registered voters among that 2.4 million were 60% Democrat. In the 2024 cycle, 54% voted for Donald Trump. So it gives you a sense that, and a lot of the discussions around crypto and politics are very much focused around the spending and the Super PAC and what have you. But one of the things that the Trump campaign understood is that there is a voter base that will vote on the crypto issue. And I think that was part of the reason why, that was part of the sophistication of the Trump campaign. They understood voting groups, better than the Biden team did for sure. And then maybe the Harris team didn't have the time to kind of get their arms around it. But yeah, the crypto voter was formidable in 2024 and decisive in some races, and they'll be decisive again in 26. We'll be there to help them.
Well, we are all going to follow that with interest, and it sounds like your job is secure and you will be busy going forward. We don't have enough time to further discuss crypto and get more of the detail that you have shared with us, which has been enormously helpful. And I know that a lot of our listeners would want to learn more. Where would you suggest they go to learn more about crypto as an industry and finance and technology, as well as politics? What would be the, obviously, online sources that you would suggest that they spend a little time researching?
There's an endless amount of information online, obviously, but I would recommend that people come to Coinbase.com, and we have a landing page there, which is Coinbase.com/public-policy. So Coinbase.com/public-policy, where we have a lot of policy insights and materials that my team produces. And we've also created this thing called the Coinbase Institute, which produces explainers and backgrounders and informational videos and things like that. And you'll be able to find all of that at Coinbase.com/public-policy.
Well, thank you for that. Thank you, Faryar, for helping us understand crypto and its role in lawmaking and politics. Thanks also to our producer, Jody Mayer-Piazza, and to the Holtzman Vogel Law Firm for its support of this program. Any opinions that are expressed here are those of the host and our guests and don't necessarily reflect the views of our sponsors or their clients. All of our episodes, by the way, are available on Buzzsprout, Spotify, Apple, and Google Podcasts. I hope you will check out our prior episodes and join us again on the next edition of Early Returns. Everyone have a good day.
Thanks for joining Early Returns, Law and Politics with Jan Baran. We hope you will join us for future episodes, which will continue to bring you voices and insights from the people engaged in our political landscape.